Hi, everybody. It's Jessica Stone from Stansberry Research, and I'm joined now by Bill Shaw, the editor of Commodity Supercycles. And Bill, we're seeing a lot of federal and regional court decisions impacting the building of oil and gas pipelines. What are some things that investors need to think about with respect to that? I mean, there are people invested in oil and gas, and then there's also people invested in the pipelines themselves. I want to ask you specifically about this case involving Dominion Energy and Duke Energy. They actually won their case at the Supreme Court, which let them build the Atlantic Coast gas pipeline. What's going on there?
Yeah, I guess they just finally gave up, and due to uncertainty in the markets going forward, and maybe possibly a new administration just decided to pull the plug. And this would have brought a lot of clean natural gas from the Marcellus shale deposit down to the Virginias and the Carolinas. And it's really it's bad for the environment. It's bad for the customers down there. And all it's going to do is force these companies to continue to burn coal to meet the electricity needs of these customers. It's not going to stop any production of natural gas.
So what's the impact then for people looking at investing in oil and gas?
It's not going to have a measurable effect on anything. All it's going to do is prolong the use of coal. And we've come a long way in the last 20 years. You know, if you look at the year 2000, we used coal to generate 54% of our electricity in the US. At the time, natural gas was about 16%. Renewables were about 9%, and the rest was nuclear. We've cut the coal burning down to 23%. We've increased natural gas to 38%, and we've doubled renewables to 18%. And as a result, we've reduced carbon emissions by 25% over 15 years. So we're headed in the right direction. I'm not sure what these folks that are blocking these pipelines really hope to accomplish.
Well, to your point, I'm wondering if I'm sitting here as a pro-environment investor and I sort of want to put my money where my morals are when it comes to protecting the environment, am I helped or hurt by this type of decision?
We could have put pipelines into several northeastern states. There's enough gas in the Marcellus to meet 100% of the current U.S. natural gas demands for 20 years. But they've blocked every kind of pipeline you can imagine. They've blocked fracking, and New York has one of the highest utility rates in the country. You know, even switching from heating oil to natural gas will reduce emissions by 27%. And a lot of people want this. A lot of schools are still being heated using this old heating oil, and they're saying that they could save millions of dollars a year by switching natural gas.
Let me bring up another pipeline decision we saw recently from a federal judge. This concerns the Dakota Access Pipeline, which goes from North Dakota to central Illinois, where it connects to other pipelines to go to the Gulf. There are actually funds invested in that in the Dakota Access Pipeline, Metropolitan Life Insurance Company, Vanguard Group Mutual Funds, JP Morgan Chase, BlackRock. It seems like investors, and particularly people who are sort of getting ready for retirement, should be even more concerned about that particular decision, which shut down that pipeline. And I guess I would ask, are those funds and the investments in that pipeline being built basically stranded now?
It could be if it's blocked forever. You know, they're not going to recoup that money that they've already put in. I think Energy Transfer said they'd lose about $1 billion, which to them isn't, in the grand scheme of things, it's not a ton of money. You know, they have a $17 billion market cap and they've got $100 billion in assets. So it's a lot of money, but what it will do is probably keep these funds from investing in future projects like this.
What about the economy? A lot of the recent economic boom that we saw was attributed to more energy jobs, energy independence. Obviously, we know that energy jobs pay very well, even if they're not a huge part of the macro economy in the United States. For some communities, they really make or break all of the other jobs in that micro ecosystem. So can our country continue to recover from this pandemic without pipelines?
That's a great question. I think a lot of it depends on the election that happens this fall. But to your point, yeah, these provide a lot of great jobs, oftentimes in very rural communities. You know, these pipelines tend to run through forests and woodlands and places where there aren't a lot of jobs. And also, you know, if your utility bills are lower, that's more money that you can spend other places in the economy.
Bill Shaw, thank you for being all over commodities and investing in commodities. We appreciate your time. And if you would like to see much more content just like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Instagram, Twitter, and LinkedIn. Thanks for watching. That's all for now.